Hey,
Go
Don,
ahead,
quick
Coffee.
question for you. So there are a number of authorities in the financial space
Yes.
who actually teach the 80-20 rule as it pertains to mortgages. Put 80% and then the no document type concept where you just have a 20% mortgage. When you said what you said earlier about not doing that, how do you address that in the financial space where this is something where they're promoting, where they're saying, hey, do the 80-20, that way you don't have such high taxes, so on and so forth.
Mm-hmm.
Just hold that mortgage with that 20%. But you're saying do not do that. Don't do that at all. How do you actually combat or challenge that concept of thinking?
Oh, coffee, coffee, coffee. You're going to get us all in trouble this morning.
I don't care now. I don't care at all.
I've talked to her. She doesn't. She doesn't
I
care.
really don't. I don't care. Because I'm serious. It's so, we already know certain quote unquote thought leaders in the
Mm-hmm.
financial space. They've been promoting this for years. And when I was a mortgage loan processor,
Mm-hmm.
this was something that we were advocates of.
Mm-hmm.
And now hearing you, this is the opposite concept of thinking. It's like you got to go through a whole different paradigm shift in order to even be able to accept the new information that you're presenting. So how do you address that?
Well, listen, we're going to show you some things here on the screen. So, listen, I had a situation not too long ago. All right. Now, I'm putting this on the screen right now. And so here's a guy who comes in. He is an engineer here in Huntsville, Alabama. And he was getting ready to purchase this $400,000 home. All right. He was going to be able to put down, the standard 3%. But if he put down the 20% that you're talking about, he could avoid PMI. You know what I mean? So he could put down $80,000, but you know what? He had significant resources. He was going to put down $100,000 over and above what he needed to put down. He was going to put down his regular money that he needed to get into the loan, and then an additional $100,000. So he would have a $300,000 mortgage, okay, for 30 years. So what we're going to do here is put these things side by side, and we're going to put in a $400,000 mortgage for 30 years. And then we're also going to put in a $400,000 mortgage. All right. So we've got a $300,000 mortgage. All right. At 3%. And we have a $400,000 mortgage at 3%. Now, on the face of this, folks would say, listen, Don, why not put the $100,000 down? Because if we take a look at this, the total interest cost on the $400,000 loan, Coffee, is $207,000. By putting the $100,000 down, the total interest cost on this loan is $155,000. So we're talking about a little over $50,000 savings by putting the $100,000 down. So already it sounds like the engineer has it all figured out. And now he's also going to be able to avoid PMI. So is that kind of the scenario we're talking about, Coffee?
Yes, sir.
Okay. But you know what advice I gave him? I told him get the $400,000 mortgage for 30 years, not the $300,000. And here's why. Okay, so for those of you that are seeing this, that $300,000 mortgage for 30 years is $1,264.81. And the $400,000 mortgage is $1,686. I said, can you afford the payment? He says, yeah, I can afford the payment, but that's not why I wanted to put the $100,000 down, is to get the lower payment. I wanted to save the $50,000 in interest on this loan, plus I want to avoid PMI. I said, well, if you got the $400,000 loan, where's your $100,000? He says, my $100,000 is still in the bank. I said, okay. What if when you made your first payment on this loan, now you gave the bank your $100,000 and applied it to principal? I'm scrolling down here, Coffee, to $100,000 in cumulative principal. Do you realize it knocks off 125 payments? Okay. That's over 10 years knocked off of this mortgage right now. And when he puts the $100,000 as a prepayment, Koffe, doesn't he actually have a $300,000 mortgage at this point?
Yes, sir.
Okay. But now he doesn't have a $300,000 mortgage for 30 years. He has a $300,000 mortgage for a little over 19 years using the same money. But there is one problem, Koffe. He is going to have to pay PMI for 1 month.
You know what? No, I'm done.
Oh my God.
And Koffe, remember I told you he was going to do this and save over $50,000 by putting this $100,000 down this way. He saves over, who can see this example? Somebody else say it.
$110,226.84.
Not 50,000 over 30 years. He's saving $110,000 and he'll never have to pay, and he's saving it in 1 month.
With the 100 that they save from interest and the 100 that they put on the loan, it's almost like they put 200 on there.
Come on. Isn't it
And
something?
then, as a licensed insurance agent, Don, I would strongly recommend that they dump that into a whole life product and just let it keep creating more money. But I'm going on mute.
Ooh-wee.
My God.
Listen, stop giving it to the bank and dump it into your whole life product and turn it into another $1 million. Come on, folks. You know, this is what I love about this, understanding how all of this works. Koffe, do you know how many people I run into that have 50, and I know you see it, 50, 70, $100,000 in the bank? I've met people who have $500,000 sitting in a savings account. Listen, do you know what we show them? That they can take that money, put it into a whole life product, okay? And do you know next week they could take out a great chunk of that money and then start investing it and still earn on that money as if it was still in their program? Oh my goodness. Okay, that's what we're talking about.
Wow.
Listen,
Wow.
there's just so much that we could do, folks, if we would just learn. Ms. Koffe, I want to thank you for bringing that example to us this morning, because people are doing that kind of thing all the time because this is what they're taught. They're not looking at the big picture. And because you brought that question to the stage, now people are beginning to see a bigger picture on this thing. If the bank is offering it, if they accept it, I guarantee you they're making money on it.
That's right.
Ms. Koffe, anything else?
You know what? I'm speechless. I'm going back on mute.
Okay, thank you so much.
Koffe, you're not alone. The comments online have kind of perked up as well. One person says, this is mind-blowing. Nunu says on YouTube, this is mind-blowing. Yuli Moss says, gratitude for this information. Others are just kind of chiming in saying, man, every time I come here, I learn something more. Folks are saying, good morning. Here's Time Mo on YouTube saying, Don, I learn something new every time I listen to you. I love how your brain works. Time for us to outsmart the banking system.
But Don has some valuable information that can contribute to the quality of a person's life. And it only costs you a few dollars. It's his book. Why not get that?
I'm going to go through the P.I.L.L method myself with some of my investment properties. So I'm going to link up with Don, and then I'm going to sit down with him, show him my investment portfolio, and see how I can eliminate interest.